Welcome to the program on principles of supply chain management. In the last session, I was introducing about inventory management. We have seen there that the basic purpose of inventory is to provide service to the customer apart from improving the utilization of your own resources, but at the same time having a minimum inventory. So inventory management comes with a lot of control techniques. We will see some of the overview of some of the techniques used in the organization. It starts with the ABC classification. It started from Pareto analysis. Pareto is an Italian scientist who has told earlier, some few centuries back, that 20% of the people in the world control 80% of the wealth. Okay, now that is being extrapolated for various activities, and you may see that you are going to get 20%, 80% of your profit from 20% of your customer. Maybe your 80% of the spend is happening on 20% of your suppliers. Maybe 20% of your inventory contributes 80% of the value. So like that, a various extension is possible in the same content. We are classifying our inventory so that we will give a different focus. Okay, of course, A is a high priority item, B is a medium priority, C is a low priority. Here, when we say ABC, we are not only classifying the item based on individual value, but we are combining with the consumption. Okay, first what we are going to do, list of item, and we should have annual consumption of this item, and then we are going to multiply the value with the consumption and then sort it out. Maybe the top 20% of the item, we are going to call it as A. Another 30% can be B, and balance could be C. You may naturally see this top 20% of the item may contribute to 80% of the value. It need not be specific 20%, 80% when we talk about. It can be somewhere close to that, and there are no fixed boundaries fixed. Why do we need ABC is to give top priority for A class item. Maybe we have to ensure availability of A class item all the time, and second is we can also include some critical item in A class item. We should also ensure that system versus physical stock is 100% for A class item. So maybe we are going to do frequent cycle counting for A class item. So this is one of the important inventory control technique. The next one is called FSN. Here it means fast moving, slow moving, and non-moving goods. So you will clearly see that when we say non-moving goods, maybe this item is lying in your inventory but not used continuously for 2 years, 3 years. Then the question comes, why you are keeping them in inventory? Why can't you scrap them? So every organization should periodically review and classify the item as FSN, and non-moving item they should scrap periodically. And coming to fast moving item, you should ensure that these items are always available in the required quantity, so that there is no stock out is happening. Okay, whereas the slow moving, you should keep a watch, don't order in large quantities. Okay, this is also one form of inventory control technique where you are trying to classify them based on consumption of the item. Okay, next one is called VED analysis, vital, essential, desirable. So all your SKUs, you can classify them based on the criticality of this component. Some component, if it is not available, then it is simply going to stop your production line or your customer production line. So at any cost you need them. Okay, on the other hand, desirable, when we say there is some substitute possible, Possibly instead of using this component, you may be using some other alternate component, and it's not going to affect either your production or your customer production. So the item SKU, list of items, should also be classified into this category so that you can focus on vital and essential components. So this is also one more inventory control technique. There are several techniques possible. One more is called vendor managed inventory. Here you are authorizing a vendor to take care of your inventory management in terms of replenishment volume, replenishment frequency. Supplier is taking decision based on your behalf. Okay, this is a form of collaboration process where you can do this vendor managed inventory only for some critical item where you feel such collaboration is going to improve your supply chain performance. Of course, here in vendor managed inventory, the ownership is with the buyer organization, and seller is just supporting the buyer in better management of inventory. The question is, you may ask why a supplier has to do it. It may be for requirement of a collaboration, alliance, and also possible continuous business to the vendor. So he is volunteering to do this type of process, and we have seen that this control technique improves the inventory availability, optimizes the inventory by using this. I have been practically working in all these areas, and they are really available. And I have given you briefly about this 4 control technique. In fact, there are several technique available which you need to understand them and see which is appropriate for your kind of a product. Coming to inventory valuation, you might have heard the company says I have 100 crore worth raw material, maybe 50 crores worth WIP, 500 crores worth finished goods. How do they evaluate the inventory? Here we are talking about valuation, inventory valuation, not evaluation. Maybe I will correct the title. So here you should also keep in mind, for example, in case of raw material, a particular part, you might know that this part might have come in different periods and also possibly with the different rates. Okay, you know, one particular component, for example, current stock, you have 100 units. 2 years back you have got 50 units at a rate of 80 rupees, and last year another 30 units, maybe rate of 90 units. This year you have got another 20 units at the rate of 100 units. So same component you have paid different prices. Now in the inventory valuation, what value you have to use, whether you have to use 80 rupees or 90 rupees or 100 rupees, what is the method? Okay, so there are different valuation methods are possible, and certain things are prescribed by the government authorities also, because you know this inventory values are declared in the income statement, and they are current assets in the balance sheet. So for a public listed companies, you may be able to find out what is the inventory level of this organization, and auditor should also endorse this value. So you should have a proper valuation method. One is called standard cost. Okay, this is what most of the organization uses. In the standard cost method, we estimate the cost of the item, and accordingly keep that price as the inventory price. Your purchase price may be 80 rupees or 120 rupees, doesn't matter, but my estimation for that component is 100 units. So I am trying to keep that value, and auditors also accept this. You can follow the standard cost process, or next one is average cost. You have given 80 rupees, 90 rupees and 100 rupees for different quantity. You can multiply the respective quantity with the price and add and take an average. That's also one more method. Next one is called PIFO. first in first out costing method. This has nothing to do with the physical issue of material. Here it's only a costing method. When we say we have received some item at 80 rupees, some at 90, some at 100, then I am going to evaluate the inventory all at 80 rupees value first in. Okay, first in value is 80, so I am going to use all inventory using 80, whereas there is one more called LIFO. In the same process, I have paid 80, 90, 100. Last paid price is 100, so I am going to use 100 for all the quantity. That is called LIFO. Then generally LIFO is not preferred. Most of the organization uses standard cost. Only the audit requirement is you should be consistent in using a particular method in evaluation. You cannot use few years some method and then change over to some other method. You should have a consistency. So in your organization you have to check what method is being used to evaluate. When you say 100 crores or 500 crores, you should be clear, because this could be one of the interview question. When you attend, they will ask you what method your organization is following. We will briefly see about the demand management is one angle. Though it was predominantly from sales or marketing was having control of this function, now it is more of a supply chain. Okay, we should know what are the components of overall demand management and how it influences the supply chain. Finally, it's an integrated organization. You cannot put a very thick line between marketing and supply chain. We are finally serving the marketing in terms of ensuring timely availability of material. So we need to understand this topic on a whole, and the function could be demand planning or demand manager. You can see in the job portal such jobs are coming, and very attractive position in many organization. And you need to also aware various process in the sales, they call sales funnel. How do you capture your clients potential order, and what are the various steps involved, and what way we can contribute as a supply chain process in this. Okay, this is where order management comes into picture. So you need to have a process for managing customer order. Possibly if you have hundreds of product, then you should promise when you are going to deliver the item, and fulfillment. One is making the promise and another one is ensuring that item is dispatched to the customer on the promised time. So it's also a part of demand management. Then doing the related customer service. Possibly there is a inquiry from the customer asking about some technical clarification or certain things. So you are going to provide some customer service. That's also a part of demand management. But one important subtopic under demand management is forecasting. Okay, this is the backbone for any supply chain management activity, because you are going to do a forecast for any of the products for the coming period, and there are various methods available, and depending on accuracy of the forecasting, all our planning happens in terms of supply planning or inventory planning. The basis is the forecasting. So even if you are not directly involved in forecasting, you should have an understanding of what are the methods of supply chain demand forecasting, which one is better, and what is the error, so that you can manage them in a better way. And we will continue in our next session on demand forecasting, what are the methods available. Thanks for watching. Bye.